Hey, pay attention. Here's a company not too many people know about yet. It's called Zspace, a provider of augmented reality, AR, and virtual reality, VR, hardware and software for education for an interactive, stereoscopic, three-dimensional 3D learning experience without the need for VR goggles or specialty glasses. They offer hands-on, learning-by-doing solutions meant to enhance the learning process and drive higher student test scores. The platform serves a broad range of educational tools designed for K-12 science, technology, engineering, and math, the so-called STEM subjects, as well as training skilled trades in areas such as health sciences, automotive engineering and repair, Unity 3DR, software programming, and advanced manufacturing. They sell their platform directly to United States school districts and community colleges, with international sales relying on resellers. To understand this company better, let's go over the market opportunity ahead, outline their offerings and expansion plans, while also taking into account some difficulties that could emerge. Zspaces estimates the total addressable market, TAM, for their K-12 and career and technical education, CTE markets are as follows. The TAM for the K-12 market to be approximately $21.4 billion in the United States, $29 billion in Europe, the Middle East and Africa, the EMEA regions, and $5.6 billion in the Asia-Pacific, APAC region. For the CTE market, TAM is estimated to be around $6.2 billion in the US, $5.4 billion for EMEA, and $0.8 billion in APAC, with an overall global TAM of more than $68 billion. These estimates are based on data from national government sources specifying the number of schools within their regions and assume a 5-year period where each public school or CTE program purchases one lab consisting of laptops and software at their current prices with an 80% renewal rate for annual revenue per laptop. Now on the subject of what's on offer, Zspace's learning platform provides an interactive, auto-stereoscopic 3D experience using familiar hardware like laptops without the need for external eyewear. It integrates AR/VR technology with science, math, and career training applications designed to help students understand abstract concepts through hands-on kinesthetic learning. The platform also incorporates eye-tracking technology and a patented handheld stylus device for natural movements and gestures in manipulating virtual objects, promoting retention and recall of information. Made possible primarily by hardware like the built-in eye-tracking technology and the handheld stylus device. They also contend their brand recognition is growing towards them being recognized as a trusted brand in the K-12 education market. Due to leadership and first-mover advantage from their experienced executive management and sales team, alongside long-standing relationships and knowledge regarding the education market and a broad patent portfolio. In the coming years, Zspace plans to target software growth through acquisitions of specific software applications and third-party software developers, expanding use cases and introducing new applications within the U.S. education market, scaling execution across carefully selected growth vectors, acquiring and retaining both K-12 and CTE users while expanding their sales with Inspire products, and increasing investments in specific sales and marketing initiatives to increase sales efficiency and user growth. Priority is on long-term growth over short-term profits, which they caution might negatively affect their near-term financial performance. They believe that investing in sales and marketing efforts, platform development, targeted acquisitions, and R&D will lead to better long-term outcomes. The company explains their future growth depends on expanding into new markets, modifying existing products to cater to customer needs, and introducing innovative solutions. Zspace also acknowledges competition comes from technology solutions providers for educators and students, CTE companies, virtual technology market players, free educational resources providers, and AR/VR-focused companies, all of which vie for customers and have the potential to offer more compelling or widely accepted education technology solutions or platforms. Furthermore, larger competitors with greater resources could lead to pricing pressure and a longer customer acquisition process. In addition to factors such as the ability to adapt to new technologies and changes in customer requirements, along with increased competition due to industry consolidation and new entrants, which also impact their competitiveness. It's also important to know Zspace entered into a merger agreement with EdTechX Holdings Acquisition Corp. II, a special purpose acquisition company, SPAC, in May 2022. However, the agreement was terminated by EdTechX in June 2023, leading to potential negative impacts on the company. In February 2024, EdTechX threatened legal action against the company for alleged breaches of the merger agreement. This resulted from the company's failure to complete a PCAOB audit and deliver required financial information, as well as incurring additional debt and not securing $20 million in equity financing. Subsequently, EdTechX filed a complaint against the company on July 12, 2024, alleging breaches of contract and implied covenant of good faith and fair dealing. It goes without saying the ongoing legal dispute will keep posing the risk of disrupting the path to financial stability and profitability until it is resolved. Then more generally, potential risks and challenges can arise from factors like the reliable performance of their hardware and software offerings, which is important for maintaining reputation, customer satisfaction, and revenue growth. The most likely sources of disruptions in platform performance would likely come from inadequate design or insufficient redundancy measures, according to Zspace. On a related note, they also say scaling the technical infrastructure to accommodate growing product offerings and increased usage could strain their resources and impact customer retention. In regards to their customer base, it lacks diversification, with Zspace stating a limited number of significant customers result in one or a few customers accounting for a substantial portion of their revenues in any given year. While they have seen some decrease in the proportion of revenue from these key clients over time, there is still risk involved due to potential impacts from changes in funding or payment delays from these customers. So it will be vital to acquire new customers, especially in the event current customers don't renew their contracts. They understand continued growth of their business requires attracting new customers with a compelling education technology platform, effectively execute sales and marketing strategies, develop relationships with partners, expand into new regions, provide quality customer support, and retain existing customers. Customer renewals may decline due to various factors such as satisfaction levels or competitive products. When it comes to the production, resale, and distribution of its products, the company relies on a few third-party partners. They state they have agreements with major PC OEMs for laptop manufacturing and rely on one Chinese partner for stylus manufacturing. Then, since the target market involves K-12 schools, community colleges, and other educators, compliance requirements may involve obtaining government licenses, disclosures, consents, transfer restrictions, notice, and access provisions for which they might need to build further infrastructure, resulting in increased costs and the imposition of constraints on their business operations. For now, challenges with compliance don't appear on the horizon, but it is something to keep in mind along with the other potential and ongoing concerns. For more on Zspace and other companies, follow Ascencore. Thanks for watching and have a nice day.